Okay, next topic is stock exchange reforms. Okay, so stock exchange reform or capital market reform. Capital market reform. Okay, so the first one you can write the circuit breakers were introduced in 1992. So circuit breakers were introduced in 1992. Okay, so what are circuit breakers? You can just write one line over there. It is a mechanism under which trading in a stock exchange or a share is halted. So trading is actually halted for a specified time period. In case of deviation in the index of the stock exchange beyond a certain limit. So if there is a deviation in the stock exchange, for example, when we talked about Nifty or when we talk about Sensex, if you can see too much deviation in the stock exchange, or a particular share is moving beyond a limit, like 10% in case of 1 hour, 2 hour gap, or 15% in the case of entire day, if it is going beyond a limit, so the circuit breakers will be applied for a particular share also. If the share is moving beyond a limit, it is applicable to the stock exchange also. So it is applied, circuit breakers were actually introduced in 1992. If it goes beyond a limit, in bracket you can write, that is, if Sensex is increased by 10% or decreased by 10%, Sensex or Nifty or any index when we talk about stock exchange. So increase of 10% or decrease of 10%. In case of very bullish market, if it is going beyond 10% and decrease by 10%. Okay, so similarly share also, when we talk about a particular share also, the same condition, 10% or increase or 10% decrease in this gap, 1 hour or 2 hour. Okay, now in case of share, it is if it is 15% in an entire day, if there is a 15% increase in an entire day, there will be a circuit breakers. Okay, so then there won't be trading possible. Okay, so 15% entire day, maybe a lot of manipulations, mistakes, mismatches, okay, huge orders, etc. may be the reason. So it is actually considered necessary. There may be manipulations which is actually maybe going to happen. Okay, so especially this is done after Harshad Mehta scam. So circuit breakers were actually introduced in 1992. Second one, Demat trading. You may be knowing this. Demat trading or dematerialized trading. Okay, dematerialized trading. So just write one line under that. Under this, computer records of stock exchange transactions are maintained instead of issuing security certificates in the physical form. So earlier security certificates, the paper certificates are actually issued. Okay, now it has to be digitized. It has to be recorded in the computer. So computer records has to be maintained. That is what Demat account and Demat trading. So there is nothing in physical form, everything has to be digitized. Okay, and 2 depositories created, and one among this we have already discussed when I discussed about NPS, if you remember. So 2 depositories were created, one NSDL, okay, and then CDSL. Okay, so what is NSDL? National Securities Depository Limited. Just write National Securities Depository Limited, 1996 it was created. CDSL, Central Depository Service India Limited. That is in 1998. Okay, so what is the function of this depositories? These are network of computers, so they maintain the record. Okay, so they maintain records. So now you see, if you keep the share in the physical form in terms of certificates, there may be a possibility that you may lose it, okay, so it can get damaged. So all those issues can be solved if everything is computerized, okay, so the customer interest can be saved, and that's the reason why went for Demat account and Demat trading. So the account in which it is kept, the share is kept, is actually you call as Demat account. So if you need to go for trading, you need to have Demat account, and you also need to have a trading account, okay. So Demat trading was introduced. So these are called as what? These are called as depository participants. So depository participants. So function, what is their function? They are basically network of computers. They maintain the records. So these are called as depository participants. You can write DP. They are called as DP. Okay. For example, Sher Khan, ICICI Direct, okay, India Infoline, all these are depository participants. Now, when we discussed about NSDL previously, I have discussed about this, right? So new pension scheme related records are actually maintained by NSDL, and I have also told you NSDL issues the PAN card. So we have discussed NSDL in the context of PAN card, and also when we discussed about GST network, I've told you it was actually created by NSDL. So that's the second one. Third one, see, there was a system which is known as Badla system before. Let me tell you what is it, and then I'll talk about the reform. So let's understand what is this Badla system. Just write one line. Under this, settlement period of a stock exchange transaction, settlement period of a stock exchange transaction can be carried forward on payment of compensation, and that compensation is what you call as Badla. So upon payment of Badla, you can carry forward the payment, okay. So the transactions or the settlement period of transaction can be carried forward by paying the compensation or penalty or Badla. For example, you are purchasing shares worth 5 lakh, okay. So you are in an agreement that maybe after 6 days or 5 days, you will be purchasing the share by paying the 5 lakh. So what you will do, you will pay let's say 50,000 on, let's say, 1st Jan. So when you are making this contract, you are paying the 50,000 only, and you are making a promise that, let's say, after 5 days, okay, on 6th Jan, I will be paying the rest of the 4.5 thousand, okay, 4,50,000. So you are supposed to pay 4,50,000. But you know, in case if you feel some issues with this particular share, if the prices are falling, okay, if the prices are falling, what you will do is you will pay a Badla, and you will just wait for some more time. You will wait for 1 more week. Let's say upon 30th you will plan to settle this, okay. So for this you need to pay a Badla. Let's say 10,000 you will pay for the 7 days. So if you pay this Badla, what will happen is you can delay this payment of 4,50,000 for 7 more days. Now imagine this case after this 1st to Jan 13th, okay. Now on the day of 13th, the share price has come down below, let's say, 4 lakh, okay. Now is it required for this person to pay this extra to buy this share? No, there is no need to buy this share, right? Because already has fallen too much, right? So around 20% fall is there. So there is no need to get into that share. So he think that it is better to leave this 50,000. Let it go, no problem. Also let it go this Badla. 60,000 is gone. But if you try to buy this share, now you need to pay 5 lakh, right? So 4 lakh is the market value, and you need to pay 5 lakh. So you will not enter into the trade. Actually, you can buy directly on the spot, right? You can buy more shares at this point of time by paying the entire 4.5 lakh, okay. So I hope you understood. So that this has to be this should not be there. So this may lead to manipulation, this may lead to a lot of issues. So actually it was leading to over speculation, because you are getting so much of margin. You're saying that I will pay later, and that may lead to over speculation. So the issues you can write, it led to over speculation and defaults. Most of the time the people, the buyers will not pay it, okay. So this led to, you can write, it led to over speculation, default in the stock exchange transaction. So it was replaced by rolling settlement in 2001. So instead of Badla, rolling settlement in 2001. Okay, now what is rolling settlement? You can just write one line under that. Under this, spot market transaction in stock exchanges, spot market transactions in stock exchanges must be completed, there is no extension, okay, must be completed within a specified time period, So that means what? The settlement period cannot be shifted. In the Badla system, upon payment of compensation or upon payment of Badla, you can actually shift the settlement period, right? You can pay the Badla, like I've shown you that 10,000 you pay, you can shift for 10 more days or 7 more days. But now this is not possible. You cannot shift that, okay? So you can write, it was introduced on the basis of T+5 system. So within 5, this is a trading day, you are making the contract or agreement and you have to settle this in 5 days. So it was T+5 system before, but in 2001 it was it is reduced to T+2 system. Okay, so it was T+5 before, and then you can pay the Badla, you can extend also, but now it is actually T+2. From 2001 onwards it is T+2. That means within 2 working days. So within 2 working days the settlement has to be done. Okay, so within 2 working days the complete settlement has to be done. So next one, fourth one, corporatization of stock exchange. Corporatization of stock exchange. So when we discussed about the types of company, we have discussed about private limited company and public limited company, right? And I've told you this public limited company or limited liability company, or wherever limited is coming, that's what you call as corporates, right? Partnerships cannot be called as corporates, okay? Proprietorship cannot be called as corporates, even though that may be a bigger company, but technically we cannot call it as corporate. So mostly public sector public limited company, those companies which are issued IPO is what you can call as, corporates, right? In general. So public limited company is what you call as corporate. So it's a limited company, it is having limited liability and it is listed in the stock exchange. Okay, so here stock exchanges also need to be corporatized. So just write that corporatization implies converting an association of person, that means partnerships. Some of the stock exchanges were in like partnership, into a limited company, that means corporate. Okay, so converting association of persons or partnerships to a limited company. What is the objective? Objective is actually to reduce the scope of manipulation by the brokers. From the broker side also there can be manipulation. So to reduce manipulation by the brokers, please write, reduce manipulation by the brokers. Second, to enable stock exchanges to raise funds. Okay, to enable stock exchanges to raise funds from the public for modernization through IPO. So now if it is a limited company, you can actually issue IPO and then you can mobilize money from the public so that you can go for modernization of the stock exchange. So these are the 2 main objectives of corporatization of stock exchange. Next one, demutualization. Demutualization. Okay, so just write one line. It refers to separation of ownership, management and brokerage rights in stock exchanges. So separation of ownership and then management, okay, and brokerage rights in stock exchange. Okay, so ownership, so who will be the owner? It will be the shareholders. Management, like board of directors. So everything has to be separated. Okay, so it refers to separation of ownership, management and brokerage rights in stock exchange. Okay, now SEBI is regulating the stock exchanges as per the norms of IOSCO's multilateral MOU. Just write there one line, SEBI is regulating stock exchanges. So SEBI is regulating stock exchanges as per the norms of the IOSCO. IOSCO means what? International Organization Securities Commission. International Organization of Securities Commission, established in 1983. Headquarter Madrid, Spain. Okay, Madrid, Spain. So what is the objective? IOSCOs, it promotes cooperation among security market regulators of member countries. Okay, so when we discussed about Basel norms, we have discussed about BIS, Bank for International Settlement. So what is the objective of BIS? Making cooperation among the central banks of different countries. So here like in India's case, the stock markets are regulated by SEBI. So similar organization will be there in different other countries also. So they promote this organization, IOSCO, promote cooperation among those organizations which regulate the stock exchanges or stock markets of different secondary markets, primary markets of different other countries. Okay, so like in case of when we discuss about BIS, RBI and other countries also, central bank will be part of that. So here when we discuss about IOSCO, the SEBI from India and other countries also, like the regulator of stock markets, will also be member or part of it. So just write one line, it promotes cooperation among security market regulators. It promotes cooperation among security market regulators of member countries, like in case of SEBI in India, okay, Security Exchange Commission in USA. So in US the same role is actually done by Securities Exchange Commission, etc. Okay, just write etc. So that's about the stock exchange reforms or capital market reforms that we need to discuss. Next we will talk about derivative trading. Okay, so we will discuss about derivative trading in the next video. There I will talk about what you mean by futures, okay, what are options, okay, and what you mean by put option, what you mean by call option, why it is done, what is the meaning of arbitrage, what you mean by hedging, what you mean by speculation, why even SEBI is promoting speculation. Everything will be covered over there. So we will stop here.